2012 meeting of the City of Santa Barbara Finance Committee will now come to order. And seeing no members of the public, I will not open public comment. Ms. Tarr, I believe you have our third quarter investment reports.
I do. I'm Jill Tarr, Treasury Manager, and I'm here today with the September 30th, 2012 quarterly investment report, also included in your agenda packet. The second attachment is the fiscal agent report, which shows the bond funds as well as the old police and fire pension funds that are held with third-party trustees. I won't go through that today. I'll just look at the core investment portfolio. We'll start with economic highlights over the quarter, then we'll look at the activity, and then look at a little bit more detail in terms of the interest and yield in the portfolio, and then we'll wrap up with the portfolio holdings at the end of the quarter. So starting off, financial highlights, you can see that financial markets posted solid growth for the third quarter. The Dow Jones Industrial Average was up 5.02%, S&P 500 up 6.35%, and NASDAQ was up 6.5%. We saw strong gains as investor confidence was stronger due to increases in jobs as well as a drop in the unemployment rate nationally to 7.6%. There were strong corporate earnings, and there were a couple of other factors at play this quarter. First of all, European banks promised to do whatever it took to prop up the European markets, so that eased investor fears over a global collapse, if you will. There's still, anxiety about what's going on, but that certainly helped ease investor concern over the global impact of a European debt crisis. Pardon? For now. For now. And then also at its September meeting, the Federal Reserve Bank announced a third round of quantitative easing, buying back maturing holdings in the long range and more mortgage-backed securities in an effort to keep the modest economic growth in the country moving forward and to keep the economy from stalling out. So that was good news and certainly translated into good gains in the financial sectors. Treasury yields remain at exceptionally low levels. They were down slightly lower at the end of September from last quarter. And the federal forecast announced as part of the Federal Open Market Committee meeting minutes in September indicated that they expect and forecast these low yields to continue through the end of calendar year 14. Some of the bank presidents are forecasting recovery even later, but the consensus seems to be through the end of 2014. So we'll turn now to our portfolio activity. During the quarter, we had $13 million in securities that were called or matured over the quarter. Of that $13 million, $12 million we went ahead and repurchased $12 million in agency securities, and we bought $6 million in certificates of deposit, new certificates of deposit with a favorable rate from Santa Barbara Bank and Trust. Our LAIF balance at the end of the quarter was $41.2 million. We typically see our LAIF balance a little higher in the first half of the year until we get our first installment of property taxes at the end of December. That helps us meet our obligations for payroll and capital projects and the like. Of that $41.2 million, $6.7 million is held in RDA balances up at LAIF. For the portfolio interest and yield, we earned just under $575,000 on the portfolio during the quarter, and the yield was up slightly by 36 basis points to 1.452. That's the first time in a long time where we've seen that quarterly yield go up a little bit, and that was attributable to the favorable rate on the certificates of deposit we were able to purchase. So it's a little bit of good news. We'll now turn to the investment yields table. And while we don't have true benchmarks against our portfolio, we do measure ourselves against the 2-year Treasury, which is an approximation of what we could buy in terms of a fixed rate maturity in the 2 to 3 year range. We compare ourselves to our LAIF rate, which is comparable to the rate we could earn on short-term money in terms of the 90-day T-bill. We do have to hold a certain part of our portfolio fairly liquid to meet our cash needs over the next few months, so we don't invest everything long long term where we could certainly get a better yield. You can see just 3 years ago in September of 2009, at the end of that calendar quarter, our portfolio was earning just under 3% at 2.92%. It's down to 1.45%, higher than last quarter, but still lowest ever that it's been, and certainly above the LAIF rate, which has now dropped to 0.35% and will probably drop a little bit lower before it begins to recover and yields turn around. We typically see about a 6-month lag between when yields start to rise in the marketplace and then LAIF. So we expect LAIF, where we hold a lot of our cash, to keep earning low interest rates for the time being. And occasionally, not every quarter, but certainly certain quarters, I like to bring this little table so you can look at our income comparison. You know, 10, 12 years ago, the interest earned on the portfolio in the general fund alone was over $2 million. Now we're looking at the most recent quarter of just under $575,000. That's on the portfolio overall. This is interest that's allocated to all the city funds based on their cash balance over the quarter. Year to date this year, in the far left, you can see we've earned $1.86 million in interest. That's down from $2.28 million last year and $2.9 the year before. So last year was down 22%. We're down another 18% this year, and at some point it should remain a little bit more stable, and the drop-off. We won't continue to see the big declines simply because all of our holdings will be at the lowest level. So it doesn't appear that we've hit that yet. And I'll wrap up today with a summary of the cash and investments in the portfolio at September 30th. Our LAIF holdings, including both city and RDA LAIF, are $41.2 million, as I mentioned earlier. We now have $8 million in certificates of deposit, $6 million at Santa Barbara Bank and Trust, and $2 million with Montecito Bank and Trust. The yield on that, on the certificates of deposit alone, are 1.267. So that's a really competitive yield relative to what's out there in the marketplace, certainly in the 2 to 3 year range. We hold $94.7 million in agency securities, that being Farm Credit, FHLB, Fannie Mae's, and Freddie Mac's, some fixed maturity bullets, as we call them, or callables. And then we hold just over $10 million in corporate notes, and our holdings consist of 3 financials, which are Berkshire Hathaway, General Electric Credit Corp, and Toyota Financing Corp, as well as one industrial of Procter & Gamble. So we're always looking for something outside the financial sector, but the yields typically are so low that it doesn't pay us to take on the additional risk of the investment in a private company, and we tend just to stay with the agencies. The airport note, that's our long-term promissory note for the construction of the quick turnaround facility. At the end of the quarter, the balance was just under $5.8 million, and we had about $5.7 million in our Santa Barbara Bank and Trust money market account that we use for our operations to pay city expenses and payroll, and that covers the outstanding checks as well as our minimum compensating balance. Total portfolio at the end of the quarter was $165.4 million. I will notice that over time we've seen our overall portfolio balance going down a little bit. In July, it went down by $2.2 million. We had to send back some money for the RDA to the county in July. Next month, we'll have to send another $2.9 million back for our RDA housing money. And then next April, the remaining fund balance before the RDA dissolution, we'll have to send back another $12 million. So we will see our overall portfolio shrink by $14 million or so over the next few months. And that concludes my report.
Okay. Any questions from committee members? I would entertain a motion to recommend that the full council accept these reports.
So moved.
All those in favor?
Aye.
Aye. Meeting adjourned.
Thank you.
Thank you.